session is to engage with you, have an opportunity to talk about different aspects of real estate investing. Naturally, that's my field. So obviously, the people that I know the names are people who are interested in real estate investing, and to take your questions. That's the second aspect. So if you have questions related to the topic, or directly related or indirectly related, feel free to post it so I can address them, and we'll take them as we move forward with the session. We do have a topic for today. I always choose a topic to discuss, usually something that comes up through the week, having discussions with other investors, and I bring it up so we can cover that. That tells me there's an interest in that aspect, especially if it comes up multiple times. I'm going to be probably a bit slow or more relaxed today, just because it's been a very hectic week. Just got back last night from Tampa after spending 5 days in Tampa, 4 or 5 days in Tampa. Very intensive, packed with meetings, back to back from Monday morning to Thursday afternoon. I actually started Sunday night, so I'm a little bit, admit it, I'm a little bit tired and exhausted. Well, with that said, let's talk about today's topic. So today's topic is actually about the concept of mortgages or loans that we are always trying to get as investors. And there's a couple of aspects of that I am always encountering when I'm speaking to investors. You can probably divide it into if you are a foreigner, meaning you're not a U.S.-based person that want to buy in the U.S. using mortgages, that's one bucket. It's a separate bucket. And then if you are a U.S.-based person who wants to invest, you probably heard that you can only get up to 4 mortgages or maybe up to 10 mortgages. And what do you do when you have more than that? So let me try and kind of put those 3 buckets, a little bit different. One with a foreigner, U.S.-based with a small number of mortgages, U.S.-based with a large number of mortgages. And of course, I'm talking about residential mortgages. I'm not talking about commercial mortgages. That's a separate topic we're probably not going to go into unless we have some time today. So let's start with the foreigners for a second, because I do know we have quite a few of those. So the simple way to go about it, for foreigners is actually expect challenges. Okay, so if you're a foreigner being non-U.S. based person, okay, doesn't have Social Security. Even if you have Social Security but you live in another state and you have no tax returns or not enough on your tax return or credit history, you'll be challenged. Can you get mortgages in the States? Yes. How can you do it? It is, a bit challenging and require creativity. When I say creativity, that means we have to work through non-traditional challenges. So if traditional or conventional mortgage, so let's define a baseline. Conventional mortgage, for me, looks like this. When I say conventional, you go to a smaller or bigger bank, some of the bigger names that you know and some of the other names that you may not know, but it doesn't matter, just a bank. And that bank, provides, on an ongoing basis, mortgages to homeowners and investors. And they have their own program, which is usually dictated, or the terms of such program are dictated by the governmental, agencies, Fannie, Freddie, how those mortgages should be underlined and processed. This is, for me, what's called a conventional mortgage. Go to Bank of America, go to another bank, local bank, credit union, whatever, and you get a mortgage. Remember, it's a different program. When you're an investor and you're buying a residential rental property, you will end up getting different terms than if you are a homeowner buying the same property. Okay, just different underlining, higher rates, different underlining guidelines. So just don't remember, it's 2 separate things. The U.S. Loans are processing those loans in a different way. Okay, we don't have to go into the gory details, because actually it's not that interesting. But just keep that in mind. If you are still in the conventional, I'll come back to the foreigners in a second or a minute. If we are still in the in the conventional approach, then you're looking at I like to call it the first 4 mortgages are considered easy. Okay, it's never easy. There's always paperwork, more information. Again, you are a U.S.-based person. You have all the transparency for the banking, credit score, Social Security, employment, tax returns, all of those things you have and you can provide. The lender likes you, especially if you work and you have that financial stability. And they're just going to ask you for questions and qualification. And if everything is fine, they'll be able to process you a mortgage. Now, usually the first 4 mortgages you have, including if one of them is your home, are easy, okay? Or simple. Let's just call it simple or simpler. Meaning you can do 20% down, no less, and get 80% mortgage, okay? Once you hit that threshold of 4 mortgages, typically, and again, remember, this is in generalities, they're different, a little bit different guidelines. If the mortgage is being underwritten through Freddie Mac or Fannie Mae, it's a little bit different. So there are some nuances and differences, but I'm just giving you the general guideline how it works. First 4 mortgages, relatively easy. When you hit the 5th mortgage to 10, you are actually in a less, of a simpler mortgage, not impossible. Usually it means no more 20% down, but 25% down. And the bank wants to see you have more reserves. The more properties you have, the bank wants to see you have more reserves for the additional mortgage. They're not requiring it when you have 4 mortgages. They are requiring it 5th and after to 10. Okay? So if you are someone here who's hearing, I can only get up to 4 mortgages, which many times I see people think that's the case. That's not the case. Okay? You can rather easy go up to 10. Okay? If you are, if you're married and your spouse works, that means 20. Okay? Assuming everything is fine. What I mean by fine, your income stability, your income history, your credit score, your credit history, your debt to income ratio. So there are multiple factors. Sometimes I get people who say, Danny, I have a 760 credit score. Is that, probably no problem. That's not necessarily the case. You can have 760, credit score, even above that, 800, and you may have such a high debt to income ratio, you will be problematic for the lender. So it's not just a credit score. The mortgage is, is a multiple factors. Each has its own weight, okay? And then there are sometimes ways for the lender to work between those factors. Okay, I may have a high debt to income credit score, but, debt to income ratio, but I can ask for a higher down payment, or I can mitigate it in some way. So it's not black and white. There are multiple balances that are determining your ability to obtain a mortgage. Job stability, good income, debt to income ratio, at a good rate. Those are, the main ones. So I always think that if you are excited about real estate and want to quit your job and start doing real estate full time, maybe you want to think about it for another minute or two, because as soon as you're in that non-stable job kind of a situation, loans are going away. Well, somewhat going away. Let's just put it this way. Okay, so remember that. When you're, so we have 4, the first 4 easy. It's never easy. Second 6, so 5, 6, 7, all the way to 10 are a little bit more challenging. Still doable, right? Still doable. I have investors who are doing it multiple times. And then the question comes up, what do you do after 10? Okay, let's put that aside. Go back to the foreigners. What do you do when you're a foreigner? Well, I know of at least one bank that is willing to work with foreigners, U.S. bank. Their program, I think it's 40% down, so not 20, not 25, 40% down, 60% mortgage, 15-year loan, but they used to do it a 15-year amortization as well. Amortization means the schedule of payments. How, you can have a 30-year amortization. That means your payment schedule is based on 30 years, but the loan is doing 15. And you can have a 15-year amortization and a 15-year loan, meaning the schedule of payments is based on 15 years and it's doing 15. Okay, so it can be 2 different ways how to go about it. This bank now tells me it used to be 15 years amortization and the loan is matured, it's done in 15 years. This bank is now telling me they're willing to go to a 30-year amortization, but doing 15. So that makes the monthly payments a little bit lower. So that's something they're looking into doing. I don't know if they decided on doing it or not. What I'm trying to say, there is one bank who's willing to work with foreigners, at least one bank that I know. What else can you do? Well, there's other couple of things you can do if you're either a foreigner or someone who has more than 10 mortgages, okay? Anytime we get to this box of non-conventional mortgages, okay, which I explained, those are the simpler ones when you work with a conventional bank, it calls for creativity. Creativity is a very nice term, usually for not as good terms or a little bit higher rates. So what can you do at this point? There's a couple of things. Number one, there's one thing I really like. It's tricky. Please don't execute what I'm about to tell you. I'm just telling you it's a possibility. Without the proper help, there are a lot of landmines in that concept. And it's called seller financing. Owner financing or seller financing. What does it mean? It means that in the States, some sellers are willing, and I've done that too, at least twice, maybe even 3 times, when I purchased properties, and the owner of the property was willing, instead of taking all the proceeds from the sale, was willing, actually I've done it more than 3 times, was willing to leave some money back in, as a loan in the property. So that means at that point, when I've done it, I became the owner, and the previous owner, who's now no longer the owner because I purchased the property, became the bank. And he had a note, and he was getting monthly payments, and he has, recorded his loan under the property. He became the bank like any other bank. It can be an individual, and it can be a big bank that you know their name or don't know their name. So it doesn't have to be. So there's something called owner financing. What's the challenges with owner financing? Well, the challenges are it's harder to find those type of properties. That's for once. They're not that common. They're not, they do exist, but they're not very common. Obviously, you need a seller who's probably an investor who's a little bit more sophisticated about the concept. You can do that too. I don't like to touch owner financing properties that are already have a mortgage on them, and that mortgage with a bank is staying. That's a very tricky, huge landmine that can be steered through, but very tricky to do. I don't like to put myself in that position. That's one of those landmines that I'm talking about. But they're out there. They're willing to negotiate sometimes. The last deal that I did as an owner financing, as a buyer of an owner financing, by the way, I got an 8% interest rate, annual interest rate. 8%. Okay? And when I told people that I'm getting 8%, I was like, 8%, that's a lot. Well, for someone who's challenged with mortgages, 8%, not necessarily a lot. It really depends on the deal. The deal made perfect sense. I was still cash flowing with that property with the 8% approach. By the way, maybe a year or a year and a half or so later, I was able to find a local bank that was willing to work with me as a challenge borrower and provided me with a better loan and better terms, and that was something of an improvement. But up until that point, 8%, I had no problem with it because the deal made sense to me on all levels. So I'm not afraid of 8% if everything else makes sense. And remember, as an investor, if I can go to the bank and just get the 20% or 25% down with today probably around 5% interest rate, I'll do that. But once I am a challenge person and I can't get, to do that, then I need to step to another, bucket. And that bucket is creativity, meaning other terms. And that's where it is. So what's my alternative? I can always, go and pay, buy cash, but do I want to buy cash a property, when I can get maybe 8% if the numbers work, right? So don't be focused on the 8% as much as what are you trying to accomplish here, the bigger picture, okay? If I have a property tomorrow and the cash flow, let's just say, it's $1,000 a month cash flow, but the rate I'm paying, not rent, cash flow after everything, but the rate I'm paying is 10% in order to obtain that property, and everything works, I don't care. That's fine, right? I mean, I don't like 10%, but if the deal makes sense, absolutely something I will consider. Other things that you can consider. Excuse me one second. Sorry, trying to sneeze, didn't work. Other things you can consider is buying multiple, properties with a commercial loan. But those are tricky, okay? Commercial loan, maybe the rate is good, but then they probably want to see who you are and what's your experience. and then they'll tell you, oh, we're going to give you 5-year loan or 10-year loan, adjustable, maybe probably up to 20, maybe 25 years amortization. So right there, you're going to start seeing that there's a lot of complexity with doing those types of loans. And of course, they still want to see who you are. If you have more exposure to the U.S. system, even if you're a foreigner, they will consider working with you, such as tax returns and multiple tax returns. And maybe if you have you've been submitting, tax returns, then they would be more open to work with you. They will be more open to work with you on performing properties, stable, properties, because they want to see, that they've been rented and what's the rent and what can you do. So it's definitely a possibility. But the one challenge I found with those guys is, first of all, it's adjustable. They're not willing to do 30-year fixed. Some of them may have at some point of the loan a period they'd be willing to fix it, but probably not more than 10 years. So there's always some risk there or some unknown on that aspect. But they exist. Commercial loans usually want to see, they're looking at two buckets. They're looking at the asset, the property or properties, and they're looking at the borrower. Okay? Now, in a way, they want to vet both. But the stronger the asset is, the less weight they can put on the borrower, and vice versa. Okay? But it's never like super strong asset and zero vetting of the borrower, and vice versa. It's always going to be a balance between those two. But this is something that that's how commercial bank look at it. They will also want a longer due diligence, vetting period. None of them will probably do it in 30 days. Usually they'll do it in 45 to 60 days. Depends on the complexity of the borrowing entity and person or persons behind it, and the complexity of the project. So that's definitely another way how to go about it. This is something we are looking into doing with our investors, is actually setting up a small fund, probably not going to be that small, to purchase bulk, list of properties and get financing. Something that past years were always a bit of a challenging. It seems like there are more programs coming up that are more fitting, but none of them are as good as the conventional lending. So I think what I want you to take from this, being a foreigner or being someone with multiple mortgages, number one, if you are a U.S.-based person, you can get more than 4 mortgages. Sometimes people think it ends at 4. That's number one. Number two, 10 is usually the first time you would see a significant obstacle. And if you have a spouse, then you could probably go up to 20, which is usually, from my experience, for the individual investor, even 10 is enough, not to mention 20 is enough. Okay? I'm not talking about the big investor. I'm talking about, the average investor probably won't even come, own more than 10 properties. If you're a foreigner, we have a program, not we, but someone we work with, but they will still want to vet you as well. Of course, it's not a given that they will work with you, but they will look into it and they're willing to consider it. It's not as good as the conventional, but it's probably better than alternatives. It's it's more 40% down, etc. And I'm sure if there are other programs out there. Seller financing is always a possibility. Challenging. Be very, very careful about that aspect. It's, in my mind, it's the most challenging one. By the way, it's probably my most favorite one when the setting makes sense. So I like seller financing for many reasons, but I already know what to what to avoid or how to make sure I'm not falling into those stepping on those landmines. And the bulk purchase, again, could be easier even for the foreigners if everything makes sense, okay? Commercial lenders, they like primarily performing asset. When I say performing, it is rented, it is producing, it's stable, right? You're probably stepping into a producing, asset, not, stepping into, something that you're buying and then have to fix up and then have to rent. They may consider it, but they love the producing or the stable, asset as well. So those are the things I want to say to all of you. I know there's a mix of people, here. foreigners and U.S. based and foreigners who operate in the States and have some transparency and some with or without. So I'm just trying to give, provide answers to all. But those are the main thing. The important thing, from my experience is there are options out there. Okay? I can tell you that I've been doing it for 16 years. I want to say that probably in the past 10 years, there's rarely a week that goes by that I don't speak to a lender. Okay? Which even includes 4 or 5 lenders last week alone. Oh, sorry, this week. What are we talking about? Tuesday? Not maybe remembers. Tuesday, probably Tuesday. We met with 4 lenders. While I was speaking, with 4 lenders this week, or meeting, in person with those lenders this week, I probably, emailed back and forth with 2 or 3 more, that I've been speaking with the week before, and I already have another meeting with another lender, 2 lenders next week. So just to show it, for me, it's a weekly thing because it's always a challenge. Always, always, always a challenge, right? It never stops. Program starts. The things that I need as an investor, personally, or as an investor who leads a group are different. They're changing too. So it's an ongoing. So be ready. There's no such thing easy lender to work with. I've never met the easy lender. Doesn't exist. Maybe I met one that seems to be a little bit, too easy, and we're not sure that he's even a real lender now. So we're vetting him actually. So those are the things. Be ready for that, right? They're going to ask you for documents and for information and more information and more information. And I'll tell you this: if you're making offers and you are not sure about your capability of obtaining a mortgage, even if the lender tells you you're safe, and especially if you're foreigners, try to always put financing contingency. Okay, I've seen multiple times that the lenders say, hey, no problem, no problem. Yeah, everything is fine. We checked, everything is fine. And then a week before closing, problem, all the way to the point that lender is all of a sudden saying, oh, I can't do this loan. And they have no accountability. They leave you hanging out there with you are committed to a purchase without actually completing it because the lender bailed out for one reason or another. I hope there are no lenders here. I don't trust any of them. Let's just put it this way. Okay? That's it. Hopefully we can have some questions. While questions are coming up, there's always a delay when someone puts a post. Couple of things. Number one, your likes are always appreciated just because it helps aggregate the video. Number one. Number two, if you're watching on the recording, which many people tell me they don't have time now, but they go on the recording, feel free to post comments as well. If you want to know a little bit of what I was doing this week, scroll down on my page. There are 2 videos from this week. One from last night, kind of wrapping up everything about that was going on this week, the ups and downs, the interesting, in more general way, and some pointers and some takers and some things that are kind of observations of this week, a short video done in the Houston airport last night while waiting for my delayed flight, naturally. And another one from Wednesday, which we actually did, I did on site on a project we are considering outside of Tampa, Florida. So you're also welcome to look at more specific project, what's going on with that, and something more general there. And I see the first question coming up. So before I'll take it, so feel free to contact us for more intimate specifics if you want to consider investing. Obviously, we'll be happy to work with you. That's what we do day in, day out, rentals and flips in multiple parts of the country. First questions come up. How was the deal in Tampa? Or how the deal in Tampa went? Super challenging, to say the least. The property is great. The numbers are super challenging. We are still going back and forth. We like everything about this project, the potential. The problem is the numbers are very tight. Very, very tight. And we are trying to see what to do with it. So it's it's a nice building, a nice school, actually in good condition relatively to its age, and the fact that it's been vacant for 10 to 13 years. So location is good, but it's all about the numbers, right? Definitely all about the numbers. And yeah, it looks promising. Sure, we'll let you know once we have more. Not sure, we're still in the due diligence, so I don't know where this leads us. We're gonna be, we're cautious about this deal for sure. Any other questions? So I thought maybe I'll do a little challenge. I'll give you a small challenge. As investors, if you want to take it, it's entirely up to you. But the small challenge, I thought maybe I want to offer all of you is, it doesn't matter if you are a beginner or experienced investor. Investment-wise, at any stage of our investment, we have challenges, obstacles. And my challenge for you, and what I found to be working for me, is actually sitting down for 5 minutes and literally writing those obstacles down. Pen and paper, I'm old school, that's me. You want to type it on your mobile phone, that's fine too. But take the 5 minutes and say, here are those 3, 5, 7, 8 items, 8 things that are holding me back, like the obstacles. They can be, I don't have money, I don't know anything about mortgages, I feel that I can't find trusted teams. What if the property going to be vacant for 6 months at a time? Try to be as specific as possible, right? If you say I don't know enough, that's just too general. Try to decipher one by one every item. Say, okay, here's my problem number 1. If I have an answer on this one, I'll probably be more ready to invest. Here's my problem number 2, and so on. If you're already investing, then your set of challenges are going to be different, okay? I can't find contractors. I can't find houses. I'm having a hard time, doing the ARV after repair value, right? I'm stuck with mortgages, okay? Once you ID the challenges, the obstacles that you are facing at your stage or phase of investing, more advanced or less advanced, you've probably done a significant, amount of work, because now when you have it listed down, you can target and try to solve those problems. You took a general notion of an obstacle and you broke it down into elements, and now you can say, okay, this obstacle, here's how I can probably focus on solving it. This obstacle number 2, this is how I can probably solve it in a different way. You're able to kind of take the puzzle of a problem and break it, and then solve each individual element or feature or aspect separately. What is the minimum amount you need to have liquid for a flip investment? I would say with us, it's usually $50,000. I think maybe once or twice for a specific situation we took less than that. It could vary on a specific project that we would actually raise the minimum to maybe 75 or 100. It really depends. For example, when we were talking about raising funds for the school, I think we had at least $100,000 for the school conversion project in Tampa. We were actually looking at the minimum of $100,000 per investor. So it varies, with us. But my rule of thumb is no less than 50 on a regular deal, so to speak. How is the general market look in terms of rental investing? I'm having a hard time finding good ROI in multiple markets. What do you expect for the future? You are offer in a common space. Most of the good markets, metros around the country are facing exactly what you are seeing, which we're seeing increase in demand by the marketplace, not just investor, while the inventory drops. So there's the gap, the supply and demand gap is increasing. which kind of fuels itself because people are getting more nervous, more desperate, more willing. You know, think about this market not from an investor standpoint, but from a homeowner standpoint. Remember, if you are dealing with residential real estate, you are, as investors, we are tailing the industry. We are not leading the industry. Most of the U.S., you know, lives in their own home, right? About 67% own their own home, and about 1/3, you know, are renting. That's just generally the proportion across the board. So we are tailing the industry. We are not dictating the industry as investors, right? Homeowners out there, they're seeing a house. They may have bid multiple times already. You know, think about the homeowner who sits there and say, you know, let's just say lives in Tampa, right? In Tampa, Florida. We're talking about Tampa this week, or somewhere in the Tampa area, right? Doesn't have to be the city of Tampa. And they're saying, oh my God, interest rates are going up. Real estate around me is going up. Like my neighbor's house, or the house I am renting, last year was 175. Now it's 185, 190, right? So everything is getting expensive. I have a little bit cash, but I didn't think about buying. But with everything going on, I might as well switch and buy before I lose the opportunity, because the rate is going up. That would mean a smaller house for me, not less of a house. Buying power, you know, weakens my buying power. And then it's getting more expensive. So I'm already a year later, can't afford the same house, same price as I could a year ago. I wasn't thinking about it then, but it's getting crazy. I'm going to start looking for a house, right? That's a homeowner. Now, that homeowner's already made 7 offers, all being rejected. The next house he sees, he says, okay, they're asking, you know, 190. I might as well put 200,000 and get it, because I just so frustrated. And out of pocket, it's only $1,000 or $2,000 more for me. Everything else is coming from the loan, but I'm just so frustrated. By the way, the same mentality I see is happening with investors. That's not completely different. But the homeowner is willing to pay more for that house you're considering as a rental, because we are number oriented. He likes the schools, he likes the street, he likes the layout, he likes where the lot is located within the community. It works for this, it works for that, right? For him, the emotional aspects of it are, you know, he visions himself in this house. Us investors, the numbers don't work. Let's look at another house. Let's look at a third and the fourth. For him, it's like, this is where my kids will go to school. This is where my family lives nearby. It works. I'm willing to pay more for that. Okay? So I think we're seeing a little bit more of a shift from rentership to ownership. Not huge, but this, you know, it can be even just 0.5% and it makes an impact. I have shift that can make an impact. So good markets around the country are seeing short inventory. Let me give you an example of something I did this morning. Just this morning. So one of my guys in Tampa, he makes offers for us on flip properties all the time, right? He's probably submitting 10, 15 offers every week. And we may get 1 in 20, 1 in 15 that we get accepted, and then doesn't mean we're actually going to buy it. So I took all the offers he made since the beginning of March until April 9th, 10 days ago. So I took 40 days of offers, right? I think I pulled out about 25, probably 25 offers made. And I started looking at those houses one by one. I took all of them. Say, okay, house number 1, what's going on with it? Put the address. No. Pending, sold. Pending, sold. Pending, sold. Out of 25, only 2 were still listed, right? That doesn't mean they didn't go under contract and came back, fell through, but only 2 were still listed for one reason or another. I didn't even investigate what's going on, if they went under contract or not. I just told the team, hey, those houses have been somewhere between a month to a few weeks already on the market. Let's maybe try again. So just to show you, out of 25, that means 23 either pending or sold. Okay, so very frustrating, very challenging market, to be a buyer. Not impossible. At the same time, I can tell you, I have a lot of investors that are active, and I see offer submitted, offer accepted, house closed. So it's still working. The one thing that I see investors are psychologically blocking themselves when they're using our analysis Excel, and they're saying, oh, it's only generating $100, I'm not going to take this house because it's only $100, they just, block themselves because they're so focused on this $100, they're not seeing the bigger picture, and all of a sudden they can't buy, right? $100, when we analyze a property, $100 a month after everything is I wouldn't call it super conservative, but it's a realistic with a conservative approach, not super conservative, but a conservative approach. And even if it starts at $100, per month as cash flow after everything, when I say everything, I mean vacancy, repairs, insurance, property taxes, property management, listing fee, HOA, all of those good stuff, right? It's not going to stay $100 for life. It's going to creep up over time. In 3 years, it's going to be 150 and then 200 and slowly go up in time while the mortgage stays the same. So obviously I'm talking about houses with mortgages. So offer, it's a challenging market everywhere. Okay. That's one of the reasons we are shifting towards buying bulk, approaching big sellers with bulk, properties, because then we have a little bit more of a buying power, which we don't have with the individual owner. Okay, hopefully that short question, long answer. Good. Hopefully that helps clarify your question. Thank you for your question, Ofer. We have other questions. I'm going to wait because usually it takes some time. Very good. I see no other questions are coming in, and anyway, it's already kind of 45 minutes after the hour. I like to keep it at 30. So I really appreciate you participating, taking time, joining the session. I guess we'll see you again in 1 week, same time, 11 a.m. Pacific time on Friday. If you have a topic we would like us to cover, you're most welcome to submit it. We'll definitely consider it. Always open to suggestions. And if you want to actually speak to me in more of an intimate environment, not publicly, by all means, let me know. Facebook and email and all those other, good stuff, applications. Want to wish every one of you happy Friday and happy weekend, and enjoy your weekend, the rest of your weekend. Have a terrific weekend, everyone. Bye-bye.